economic crisis in Turkey this morning, talking about money. The Turkish lira plummeting as worries about that country's financial woes are starting to rattle global markets. Here is Belpointe chief strategist David Nelson joining us on this because, of course, this is rippling through global markets. Great to see you, David. Thanks very much for being here.
Thanks for having me.
So give us your characterization of the situation as it stands today in Turkey.
You know, we wake up on a slow Friday and we think it's going to be a pretty calm day for the markets, and you wake up to something like this. It's a currency crisis, and, you know, I started my career off by looking at the Thai baht take down global markets around the world, so it can have its tentacles. Right now, you can bet just about every European bank is scrubbing their books, looking to see how much dollar-denominated Turkish debt they have, and it can translate over to this country as well.
Well, I mean, is there really that kind of systemic risk, though, that U.S. markets would be having this kind of reaction?
I think the U.S. markets will be okay, but it's moving into safe haven assets right now. You're seeing the 10-year yields have fallen as low as 2.88% this morning. That's down all the way from 3% where we were just 10, 12 days ago.
That's a good point.
So here's my take on this matter is that we've seen geopolitical risks really be thrown to the wayside by the market. If you think about when North Korea, sent a missile over Japan, when you think about everything that's happened, right? Even Brexit, right? The British referendum, right? We saw volatility spike. Right, that was a summer event, and then all of a sudden the market just rebounded. Is that what's going to happen here? Should we really be concerned about this?
I'm not concerned about the U.S. markets, but it is a concern for Europe. It's certainly a concern for emerging markets, where emerging markets are sitting at about a one-year low right now. A lot of investors have assets in these dollar-denominated assets here. So ultimately, the United States is going to be okay. But one side note, we have very important military assets in Turkey. The Incirlik Air Base is at the southern coast of Turkey, close proximity to Syria, so it's an issue for us, and the rift between Washington and the Erdogan government over the jailed American pastor is going to weigh on these negotiations.
Would you be a seller in this market today?
I would not. Okay. Certainly not U.S. assets, no.
And Dave, this is just a simple kind of repricing of the international sales and earnings of these big multinational companies when the dollar rises the way that it is in these kinds of a crisis like this, if you want to call it that it puts pressure on their business when the dollar is so strong.
I think it could also put pressure on the Fed. For my money, I think the Fed is on the verge of a policy mistake, and the rising dollar, rising rates here in the United States is weighing on emerging market assets. We don't live in a vacuum, and the short end of our curve keeps rising, and the long end of our curve is static. We flatten out the curve. The Fed's own research points to every recession since 1955 was preceded by a flat or inverted curve. So I think they should be watching this.
Just one quick point on this, and because you mentioned the Fed, this all started when Erdogan actually decided to take over his own central bank and dictate his own fiscal policy, right? So this is a self-inflicted wound. I don't really want to just put it onto one thing, but that's what really started trickling into the Turkish lira selling off.
Well, they clearly have a crisis from a government. There was an attempted coup here not that long ago, and he's trying to exert his power, and he doesn't want to be dictated to by the U.S. government. So we'll see how this plays out, but it is an issue for markets, and it'll play out over the next couple of days.
But fair to say that this is not a systemic problem of emerging markets so much as a specific country-specific
I don't know about that. I think it could be systemic for emerging markets. I don't think
emerging markets.
Not for us.
But that actually leads to potential losses for the U.S.
We never
as well.
know
If we
how
start broadening out the emerging markets, that's going to be a problem for the U.S., I imagine.